You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, what are we seeing for futures prices?
Well, of course, yesterday on Thursday the 19th, the futures markets were closed in observance of Juneteenth, that federal holiday. But the day before that, there was some real fireworks in the wheat market. I think it had a lot to do with the forecast hot, dry weather coming and the wheat harvest just right there. So the wheat futures on that day really took off. Uh, July up 23 and a half cents up to 571 and a quarter. September up 24 cents to 586. It's got to the point where again 24 and a half cents were kind of were the amount of increases for all those back months. So we had July 25 wheat harvest, as we said, 571 and a half, July 26 up to 644. And given the struggles we've just had in wheat, you wonder, people are probably asking themselves, well, gosh, 644 isn't that bad of a futures price compared to what we've been struggling with here, hoping we'll stay above five. So anyway, some of these distant opportunities are out there and for farmers to consider. And of course, D26 up to 669 and three quarters. I think it's something to keep watching as we keep going forward, particularly in harvest season. So, and uh, we've had this general malaise in the corn and soybean markets. I think we'll talk more about that later, to where really no thoughts of or acknowledgement of crop risk in those, at least to date, until this weather forecast showed up. And again, we'll be talking in just a minute about how July is the time of risk for corn and August for soybeans, even with a pretty good June up through mid-June anyway so far. So we got that, and I guess when you look at the corn market, you've got 433 and a half for July was the Wednesday close for that futures contract. Dees 444 again. Dees corn and really not showing any crop risk. It'll be really interesting to see if we get dry weather over the next week or so, and when concern starts to come into the market a bit about what the possibility of hot dry temperatures could be, what that Dees corn price will be. And for soybeans, not a lot of movement there. Saw a close for the July contract at 1074 and three quarters on it would have been Wednesday the 19th. But then the November contract 1068 and a quarter. So again, just pretty flat, really not a lot going on. So again, the days of risk and uncertainty and potential volatility for those two contracts are out in front of us, i.e., July and August.
What are we seeing for cash prices?
Well, with the futures not doing much for corn and soybeans, not a lot of change. Again, the highest cash price for corn, 433 per bushel, even money basis, even money par with the futures in the Garden City area, and basis levels from there of 13 under in Topeka area down to 420, and everything else being 25 to 45 under. So not a lot going on. New crop bids kind of struggling again. The one that looked pretty good for corn is again 449 in Garden City, but not everybody lives within truck driving distance of Garden City. So we tend to have again 19, 15, 30, 35 cent basis levels off that D's 440 price for these new crop bids. Grain sorghum, even with a little bit of movement now in exports, still pretty weak. Grain sorghum basis 75 under in the Garden City area, and really, and that's the strongest basis bid we've got on cash side. Soybeans, uh, you've got some just unique things happening in the Topeka area. There's a top bid at one elevator of 1051, 22 under basis. But and the other basis bids that are in even within shouting distance of that in the Hutchinson and Pittsburgh areas, of 46, 45, 46 under. Elsewhere, a lot weaker basis. And of course, wheat with run up in futures, seeing the cash price bids now jump pardon me, up to 561 as a top in Salina, Topeka, and Hutchinson. 525 in the Pittsburgh area, 506, 501 in out in western Kansas, Garden City, and Colby. So not a lot of movement or a lot of change. Pardon me, but you do see, just watch some interesting bids where certain elevators must be looking to fill trains, or they have something's happening with storage. You've got one bid in the Pittsburgh area, 574, that's down southeast. Another bid in the Colby area, 559. So unless it's a misprint or something, uh, those bids compare pretty well well, and pardon me, a 584 bid in Hutchinson. So you do have some unique new crop bids that come in, and of course I'm sure that and these are forward contract bids, so that's something for grain producers who are pretty sure of harvest coming on, have good crop and hail insurance and all that, to take advantage of, and perhaps come in better than where the market would be otherwise.
And Dan, have you seen some big changes when it comes to looking at a wheat and corn ratio?
Yes, you and I have been watching the ratio of wheat cash wheat prices to cash corn prices in the Garden City area, because if we're going to feed wheat anywhere, it would be there. Well, what just happened with the 20 to 25 cent run up? It happened in futures that just boom on Wednesday the 19th. Suddenly that ratio is at 117%. So when the wheat price jumps up, corn price stays where it's at, then it works against the profitability of feeding wheat, and that's what happened in this situation.
As we're thinking about that corn crop, what's the current risk with that crop in the field?
Well, uh, the risk in terms of corn kind of tends to be defined by when the crop is vulnerable to high temperatures, and that's of course as we come out of where we're at right now in the U.S. and in Kansas, where the crop's pretty much, it's been planted, it's emerging. Next vulnerable time frames are silking, doughing, and again, moving on, denting, moving on to maturity. A lot of that happens from now. You're starting into that in the last half of June on in through July. And, so we're coming into that now. Suddenly, we've got hot, dry temperatures forecast for about the next week or so. And still worries about what weather forecasts are for July. To me, it's as you and I've been talking about this, we've kind of wondered about where's the worry about crop conditions for for corn and soybeans yet. Well, it seems like with I think with a combination of the market being worried about tariffs on the one hand, overall in agriculture with um, generally up to this point pretty good moisture, not too stressful conditions, and probably algorithm computerized trading affecting how you value risk or not. More so than it was in the past, that the market really hasn't been valuing risk going forward, as you put it, as you look at the harvest contracts for Dees corn and November beans, and the CME, Chicago Mercantile Exchange, has indices that show the amount of risk that the market's I guess trading on, and it's a 30-day rolling averages. It's a CVOL index for corn and for beans. Both of those markedly lower at this time of year than they have been in previous years. But in previous years, there's tended to come a spike, a big jump when volatility came in, and we just haven't seen anything like that so far. Well, uh, if weather is going to drive something like that, it probably is going to happen in July for corn, in August for soybeans. So now we've got some weather conditions at play, or at least forecast to be at play, and we'll see where that goes. So and I would say, just to clean up a few other issues, still strong U.S. corn exports. There's kind of a preliminary export report that came out on Monday. Then there's final one that comes out typically on regularly on Thursday. It'll be out on this morning instead, but uh, but again, 65, 66 million bushels for the of corn shipped for the week ending the 12th. About 1.1 million bushels shipped of grain sorghum for also for the week of June 12th. Soybeans are struggling more. Again, I think you've got the weight of strong South American crops coming into play. Last thing to say, we've been talking about weather issues in South America for a while. Well, now their problems, what they're worried about isn't being dry. They're getting too much rain in a number of their key production areas. So that can also be at play with our heat in the next couple of weeks.
Dan, I appreciate you taking the time to join us today.
Thank you very much. Appreciate it, Shelby.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you up ahead.